If you've been working harder but feeling more broke, this will hit home. I see this all the time. Business owners making $1 million in revenue, and yet they're paying their employees more than themselves and wondering where all the money went. The truth is, chasing revenue isn't going to fix this. In fact, it's probably the reason you're stuck. I'm Abby Johnson. I've worked with business owners in over 40 different industries, helping them go from in the red to in the black, take home more money, take more vacations, all while enjoying the business they're in. So today I'll show you what most successful business owners are doing and how to bring home more profit instead of chasing more sales. So the thing is, more revenue usually means more problems, and a lot of people tend to throw money at their problems. I had a client named Bobby. He was a top realtor in my area. He started working with us and he was having his best year ever as a realtor. So while he felt like he was making a lot of money, he didn't realize that it was actually tens of thousands of dollars throughout the year he had to put into his business to keep going. And what happens with a lot of business owners is the business starts growing like this, but then at the same rate, the expenses start growing. So you're caught in a hamster wheel you feel like you can't get out of. You need to make more sales to cover the more expenses. Let's take a restaurant. So they run a special, buy one, get one half off, 50% off, and they are slammed. They can't turn over tables fast enough. They had to bring in extra people to work, but then at the end of the night, they're actually in the red. They had to pay their staff, they had to pay for the food, and they so severely discounted it to bring the people in the first place that they don't even end up profiting. There is a better way to do this. The problem is most businesses are running on a broken formula, and that formula is revenue minus expenses equals profit. And what ends up happening is people are chasing the revenue, they go and spend the money, and then they're left with pennies at the end of the day. What we do here at Matterhorn is we use the profit first system. I'm a certified profit first professional, and this is how I've been consistently helping my clients bring home more profit. What we do is we take this broken formula and we do revenue minus profit equals expenses. So we've flipped the script here. We're going to set profit aside first. This means an actual profit distribution, a bonus for you, the owner, at the end of the quarter, your owner's pay, making sure you have guaranteed consistent pay and taxes set aside. And then we figure out how to run the business with what's left over. This means getting more innovative with the spending you are doing. Do you actually need these things? Is there a more frugal way or economic, efficient way to get what you need? With my client Bobby, I mentioned earlier, this is the first thing we did was we implemented this system. He could see what he could afford to hire an assistant. He could see what he could put into advertising and how much he could pay himself. And then with his profit distributions, he was able to do fun, amazing things for his family. He was able to buy a golf cart to putt around the neighborhood with. I think they even started a side business with him and his son. What actually happened here at Matterhorn is we were fixing businesses. We were helping them grow. We were helping put in systems. We were helping them make more revenue. But then we had a client, I will never forget it, our client Mark, and we met with him and we were like, Mark, you grew by $200,000 last year. Congratulations. We were so proud of him. We were proud of ourselves for helping him reach that. And he said, yeah, but I still don't have any more money. We were like, wait a minute, he still doesn't have any money. This is a huge red flag. And that's what brought us to profit first. And now I implement this with every single client. And this is what helps secure the future of the business and the future profitability of the business. The way we do this is you actually are going to set up 5 bank accounts that you're going to allocate to on a regular basis. That first account is an income account. This is where all deposits are directed to. And on a regular basis, you're going to allocate to these following accounts. The first one being an account called Profit. This is an account to bonus yourself with. This is to reward you as the business owner, investor, founder, whatever it may be. This account also helps you build a reserve as you're only going to take out half of it every quarter. So that other half will build up as an emergency fund. The next account is owner's compensation. So this is what's going to secure your pay, make sure you're paying yourself consistently on time. You're not just taking money willy-nilly when you need it for your mortgage or whatever. This is your paycheck. This is how you consistently get paid from the business. The next account is an account, we all know we need to do this, but we don't. The beloved tax account. This is how you are going to cover your tax bill, no sweat. The final account is the operating expense account. This is the last account to get allocated to. This is where expenses get paid from. This account is what tells you what your business can actually afford to spend so that you aren't going and buying things things before your business can actually afford them. Now, I know this may seem simple, but the thing is, most business owners don't actually do it. They know their numbers are messy, but they're afraid to look too closely. If this sounds like you, there's a link below to book a free profit assessment with my team. We'll help you set this up step by step so your money finally feels under control. I had a lawn care company client and they came to me, they were doing negative $22,000 a year, but $3 million in revenue. After a year of Profit First in place, they were positive $250,000 without actually increasing their revenue. It was simply by managing their money smarter. I'm sure you're thinking, I don't have time for some extensive financial system, but listen, once this is in place, then all you have to do is twice a month, take 5 minutes to transfer the money where it needs to go. So now with this system, you can clearly see what money is yours, what can the company actually afford to pay you, and what can the company actually afford to spend money on. Think about how it's going to feel at night if your bank accounts look like this. There's money in the accounts, you know how much you can spend. That is priceless, to be able to sleep and have that stress taken off of your shoulders. And it's totally possible to still grow and expand just a little bit smarter. I had a client, Dr. H. She already had 2 locations, and while we were working together, she was able to buy 3 investment properties through her profit distributions. Then she was able to move one of her locations into a bigger location and then had to remodel and upgrade the new location. That money was taken from the profit account. And this was all from a place of ease. We just did this at a very calculated, measured pace that took the stress level off of her immensely. Now, when we're talking profitability, of course, I need to talk about pricing. And it's very easy for me to say, yeah, just go raise your prices. But again, that doesn't solve the real problem. You don't know if you're actually profitable. You don't know if that's the right range for your business, your market, etc. But what I want to tell you today is that your pricing matters so much. You have to be on point with your pricing, and I'm going to show you why. So I want you to look at this example here. This is their existing pricing I've highlighted. They've done 30 transactions in a month and made $82,500, a 14% net profit, meaning they made $11,550. Now, of course, if they increase by 10%, that means that they did $90,000 in sales. It increases the margin to 21.82%, and then they would profit $19,800. Now, that's great. That's easy to go implement. But what I really want you to think about is what happens if they reduce it? Because I've heard this a lot of, well, I'll just lower my prices and then I'll close more sales and my problem is solved. So let's say this business owner did that. If they reduced their pricing with those same 30 transactions, they would have made $74,000 in revenue. Their profit would be 4.44%, and they would have only profited $3,300. Imagine the work you have to put in to generate and deliver $74,000 worth of services or goods, and to only have $3,300 at the end of the day for it. This very well could be part of your problem. And let's say that you wanted to be low market pricing. You were fine for some reason with a 4% profit margin. To make that same profit you were previously making here, $11,550 in profit. If you reduced by 10% your price, but you wanted to still make that $11,000 profit, you would have to do 105 transactions for $259,000. That's insane. This is why more revenue does not mean more profit. This business is doing nearly $260,000, but only netting $11,000 to show for it. So combined with the Profit First system of managing the cash, you also have to make sure that your pricing is on point. And if you're ready to finally get your money under control, click the link in the description below and book a free profit assessment with my team. We'll look at your numbers, find where your profit is leaking. There's no cookie cutter solution for this. These are all specific strategies for you and your situation. I'll see you in the next video.